Pete McGuire, Chief Exec, XM.com, live in our Sydney CBD studio. Pete, welcome to you. If G20 counted for not much, it did, though, illustrate, did it not, that Russia and the Saudis could knock heads together to at least agree a framework. A task force has been announced. How important a development is this?
Well, good afternoon, Carson and team. Certainly, Carson, yeah, I mean, who would have expected it? They're arch rivals in a lot of ways, but they're both engaged in that, well, a war of some sorts in Syria. Putin met with the deputy prince at the G20, and of course those oil ministers also spoke, tried to rally the cause and look at cutting production, or at least talks of that, and it sent the market up 5%, and then it paired gains back to around about 2%. So the market is certainly jittery. We understand that New York was shut last night, so it'll be interesting to see how the next 12 hours plays out as far as NYMEX.
The energy minister out of Russia, Alexander Novak, saying effectively, look, 50 to 60 is fair for everyone. You know, equity rules, exclamation mark. Is that going to resonate?
Well, it may, but also we have to understand that the framework regarding this meeting of sorts in Algeria really isn't a meeting. It's a talk and a discussion point. Their next meeting really is November as far as OPEC's concerned in Vienna. So leading into that, it'll be interesting what comes out of it, if there is some form of compromise. But we have to also understand, Carson, that there's some major projects or massive projects about to hit as far as increasing production from oil and of gas exploration that's going to flood the market over the next couple of years. So it's going to be interesting how that all is coupled into the market as well.
So they're saying that the task force will be reviewing oil market fundamentals. They'll be factoring, therefore, into play some of what you've just been talking about into the future. But, Mark, come in
497.
on 497. That is the magic number at the moment, Peter. That's where we're sitting on Baker Hughes.
Yep.
Now, in context, if you could, on that.
Well, when we take that on board, naturally, at cheaper energy prices, Carson, the rig counts are starting to come back up at that $45, $47, $48 mark. They're seeing that there's a return. They were hemorrhaged, as we all know, from, the 2014, 2015 numbers, and they're building week on week, or certainly month on month, and Mark tells us each week that they are heading north. So what happens over leading into that Christmas period, it's going to be interesting. If we've got any outages as far as weather, we've got storms and certain, hurricanes forecast. So it'll be interesting if that has any impact to the Baker Hughes rig count.
Because, correct me if I'm wrong, but I mean, it seemed a very benign storm season just passed, is it not?
Yeah. Well, exactly. But remembering, Carson, that the middle of the season's about the 13th, 14th of September. So we're only really, a few weeks into it. Certainly it starts around that July period. It's been quiet. But we can have a late, and as we saw in around about 12 or 13, those big winter storms coming into the northeast as far as New York, which was hampered and hit, very, very savagely. So it's not unusual to see that in October or November. So the season could be a little bit behind itself. Water temperature is certainly, relatively high, and that can greatly impact from a hurricane standpoint.
Put it all of this discussion in some kind of context, real economy. You get Eurozone, you get PMI releases. We had this notion that cheaper energy was going to be the ignition switch for a lot of economies. Turn that key and fire on all four cylinders. These numbers are not showing that's the case. Why not?
Well, exactly. I mean, when you look at the CapEx spend and take into consideration 2013, we were spending about $220 billion on global CapEx for oil and gas exploration. In 17, we're going to be down to about $140 billion. So, as you know, Carson, we've discussed it month on month, jobs slashing globally across that whole exploration business model. And it's been evident, it doesn't matter if you're in Norway or Brazil or Uganda or Papua New Guinea, headcount has been slashed. So it's very, very, it's just the conscious way of doing business at the moment. And that's always been a byproduct as far as the cost. We look at, that $40 to $50 oil, and big oil is just saying it's very, very hard to compete at this level.
So, yes, I accept that for the industry, but I'm thinking broader economy, the actual uses for the very stuff that they are...
Why is it not a stimulus?
Exactly. Why is that not a stimulus? It's because stimulus has gone AWOL.
Well...
on cheaper energy.
Yeah, exactly. Well, as far as the consumption patterns, we haven't seen a drop-off. They're still holding that 91 million barrels a day as far as usage. That number will continue to grow to the upside, but there is more production than consumption, and it's outstripping it by 1.5 million to 2 million barrels a day. There's more coming online with these mammoth fields over the next couple of years, and that's going to grow numbers there. So unless you can see consumption really starting to pick up, I suppose we're all going to drive bigger V8s, Carson.
Well, what is it? Well, I don't know what Draghi drives, but the point is...
Probably a Bentley.
Okay, you said that with some degree of certainty. I thought it might have been a
Maserati, but it'll be a Maserati.
It's got to be Italian, yeah, right.
Yeah.
Okay, so you choose Maserati. What are you choosing? I mean, name another mark. I mean, Fiat. I don't know. Be a bit more, you know, like the Cabineri in Rome. But the point is, Pete, ultimately, does he do anything by way of stimulus, or if you're trying to unlock spending and you haven't even at these levels, because they're at negative rates?
Well, exactly right. Oh, look, that's the great dilemma, Carson. We spoke a couple of months ago back in Germany, and you said, how was this general consensus? It's it's relatively weak. And I don't think there's been a turnaround over the summer period. Yeah. There's nothing really out there. I mean, the Brexit numbers were better than, you know, as far as those recent numbers coming out of England. But overall, there's weakness across that Eurozone, Carson. And we don't see any sunshine coming from those markets in the foreseeable future, and that's demonstrated by those weaker than... well, not only weaker, but falling interest rates. And it just seems to be the way of doing business.
Pete, unfortunately, we could talk a lot more on this, but we are having to move on. So thank you so much, as always.
Thank you very much,
Appreciate
Carson.
it. XM.com CEO, Pete McGuire.